Welcome to our weekly roundup of key business developments in Sri Lanka. I'm Nishani Figuera. Let's first take a look at the main stories for this week. New Parliament session convened. IMF to conclude visit. ADB approves $200 million loan. In our top story this week, on Thursday, the 10th Parliament of Sri Lanka convened its inaugural session following the National People's Power Party's victory of a two-thirds majority at last week's general elections. On Monday, President Anukumara Dissanayake appointed a 21-member cabinet, retaining the finance and defence portfolios for himself. A significant feature of the new cabinet is that 13 new members of parliament assumed responsibility for portfolios. The IMF will conclude its visit to Sri Lanka this Saturday. A delegation led by Peter Brewer, IMF Senior Mission Chief, conducted the third review assessing current economic policies, progress of ongoing reforms, and the implementation of previous IMF agreements. The delegation met with President Anukumara Dissanayake and discussed unspent social allocations, anti-corruption, governance, and poverty. The discussions also focused on reviewing the current tax structure, as President Disanayake's National People's Power Party has suggested increasing the tax-free threshold to 2.4 million rupees from the current 1.2 million and to bring down VAT on medical supplies. However, this remains challenging as Sri Lanka is expected to maintain revenue at 15% of GDP and 2.3% primary account surplus from 2025 onwards, according to the IMF program. Further, a proposed salary hike of 7,500 rupees a month will cost 100 billion rupees, while the current fertilizer subsidy is already costing the government 30 billion rupees. According to the World Bank, Sri Lanka should do everything possible to regain the B credit rating by 2027 or 2028, just ahead of restarting debt repayments. According to Gregory Smith, a lead economist at the World Bank, borrowings through the market will be much more affordable under such a scenario. The bank also recommended that Sri Lanka develop its digital economy, tourism, and agribusiness. In October, the World Bank doubled Sri Lanka's growth forecast to 4.4% and stated that the country has come out of bankruptcy. It also highlighted that Sri Lanka has untapped export potential of around $10 billion, which could generate around 142,500 jobs. The Asian Development Bank, in its continued support to Sri Lanka, approved another $200 million to help strengthen the financial sector. The loan is expected to help improve the bank's sector's asset quality and ensure financial inclusion of women and other vulnerable groups. This program is a second sub-program to the recently concluded Financial Sector Stability and Reforms Program, which disbursed $400 million to help stabilize the economy and support recovery. The all-share price index at the Colombo Stock Exchange held steady above the 13,000 range despite some profit-taking by investors. The market has gained nearly 2,100 points since the September presidential elections. The current two-year high index is expected to test the all-time peak of 13,590 recorded in January 2022. Despite slight profit-taking, turnover averaged at 5 billion rupees, with banking and plantation sector stocks driving momentum. This is primarily due to the current low interest rate environment, which has driven private sector credit to 7.8 trillion rupees as of September this year, up 8.9% from a year earlier. Further, the completion of the new parliamentary elections also renewed investor confidence. The Manufacturing Purchasing Managers Index in October rose 58.1 from 54.1 a month earlier, continuing to remain above the 50-point level, separating growth from contraction. Expansion was mainly from an increase in seasonal demand, with firms getting new production orders for the upcoming Christmas season. Further, stock accumulation was also seen in preparation for the festive season in the months ahead. Service sector PMI also grew in the month to 60.3. The service sector is currently benefiting from favorable interest rates and increased private lending. In our weekly tourism update, in the first 17 days of November, over 103,000 tourists arrived in the country, bringing the year-to-date total to over 1.7 million. Daily arrivals rose significantly to 6,077 in the month from the 4,384 recorded in October. India continues to be the primary source market, followed by Russia and Germany. At the Treasury bill auction held on Wednesday, yields on all maturities fell for the second consecutive week. Bids amounting to 329 billion rupees were received, of which 145 billion were accepted. The Sri Lankan rupee appreciated this week, with the central bank's indicative mid-spot rate ranging around 292 to 293 rupees. So far this year, the rupee has appreciated over 10% against the dollar, making it one of the best performing emerging market currencies. And with that, we wind up for this week. Do subscribe to our YouTube channel at the link below for regular updates on business and economic developments in Sri Lanka. Until we see you again next week, thank you for watching. Stay safe.